Good afternoon. Time to have a look at what's happening from a markets point of view. Starting off with things in Asia, where markets were largely lower on the back of the comments that came out of the Chinese central bank, as well as comments from Fed Chair Jerome Powell. Nonetheless, what we're going to be focusing on as our chart of the week, and we're going to put it on screen for you, is the dollar rand that has been down 6.3% for the week. Again, it's the comments from the Fed Chair, the aggressive rhetoric around Fed policy that is strengthening the dollar and hurting emerging market currencies. And so far, what we're going to do is put a 10-day chart on screen for you to see how we've tracked the performance of the rand, starting from April 13th, where we saw the rand strengthen on the back of stronger commodity prices, as you can see there. And then a few days later, mining data came out, which disappointed, adding concern to the economy. We saw the rand weakening. A few days later, stronger dollar, as well as the power cuts, fueling some of that pressure we're seeing on the currency point of view. And we're seeing that pressure continuing a little bit earlier this morning. The rand 15.65 to the dollar. And at the bottom of that particular orange line, you'll see the yellow line. There we've just indicated the relative strength index, the momentum, indicating for you where the activity in terms of overbought territory is in terms of the currency, and an indication, or rather a number above 70, indicating overbought territory for a particular currency or an asset, generally an indicator to the market that there is some pullback that is expected and a downward trend would kick in. But nonetheless, let's have a focus in on some of the other developments taking shape in the markets right now. And for that conversation, we are joined by Lukman Otunuga from fxtm. Lukman, thank you so much for your time. What would you say is the main key theme right now for global markets?
Thank you for having me here. It's always a pleasure. It's been another volatile week for markets. We've seen currencies explode into life, stocks oscillating between losses and gains, and even some action in the bond markets. There are a couple of themes on our radar. The first one, of course, is heightened geopolitical tensions. As uncertainty revolves around the Ukraine-Russia developments, this continues to hit global sentiment. On top of this, though, there are other themes like, Fed rate hike expectations, soaring commodity prices, and fears over rising inflation really straining risk sentiment. I think this week, one of the key talks is the fact that the IMF and the World Bank displays showed a weak global growth outlook, and this is going to add to the toxic combination of negative themes that are continuing to hit risk sentiment.
I mentioned in my intro, the way the rand has been reacting, which then brings the question to the dollar performance since the beginning of the year. What's your assessment of it?
So, fun fact, the dollar's actually appreciated against every single G10 currency, excluding the Australian dollar this year. It looks like everybody wants a juicy piece of the world's most liquid currency, thanks to the fact that the Federal Reserve is embarking on an aggressive path towards monetary policy normalization. You have to keep in mind that the uncertainty revolving around geopolitical risk as well has also sent investors rushing towards the dollar's safe haven embrace. And looking back at bond markets as well, 10-year treasury yields are rising, which is also sweetening appetite for the dollar. I think moving forward, as the Fed continues to remain aggressive towards tighter monetary policy, the dollar has the potential to appreciate. Looking at the dollar index is incredibly bullish, and if the upside momentum holds, the dollar index could trade to levels not seen since 2016, just below 104.
So you had comments from Fed Chair Jerome Powell saying that the May meeting, a 50 basis point hike, is on the table. To what extent has the market priced in 75 basis points at a June or July meeting?
Certainly, early in the week we saw that St. Louis Fed President James Bullard said he'd like to move faster and move ahead, thought that it was appropriate for a 75 basis rate hike. And adding to the fact that Jerome Powell also adopted an aggressive approach towards monetary policy normalization, there's a lot of chatter around the possibility of the Fed taking a step. However, though, looking at money markets, even though it's been priced in that a 50 basis point is happening, there's a less than 50% probability that the Fed may move ahead with that 75 basis point everybody's talking about. But if it does become reality, this has the ability to turbocharge the dollar, which is currently still the king of the FX space.
We are still in U.S. earnings season. What's your sense of it thus far? And is there a particular company that has stood out for you?
Yeah, earnings have been quite interesting so far. About roughly 80% of US firms have reported earnings that beat estimates, including Tesla and major US banks. But the one that really hijacked my attention this week was Netflix. I've got a Netflix account. I'm a ardent binger when it comes to series, and the earnings were quite shocking. Their shares plunged 35% midweek due to the fact that lost a lot of subscribers in the first quarter, in the most recent quarter. And it makes sense, as we're returning back to normality, COVID is becoming a theme of the past, and the increasing competition in the digital entertainment space. Netflix and other, big companies in that industry have a lot of competition. And I think it would be interesting to see whether we have similar results in the next earnings seasons for Netflix.
Before I let you go, Lukman, in terms of events that you're keeping an eye on or concerns that you may have at the back of your mind as you look at your screens every morning, is there one that you could share with us?
Yes, certainly. I think I'm actually looking at the FX space. The key, not really concerned, but the key thing, on my mind right now is the handling of the Japanese yen. We've seen that the Japanese yen is really taking a brutal beating, and for most people, looking at the fact that this is a major place of uncertainty, they say that the yen is your friend in times of uncertainty, but the yen is getting no love. And there's 6 words: monetary policy divergence, interest rate differentials. The Bank of Japan remains one of the most dovish central banks out there, while major central banks across the world are hiking interest rates. And the Bank of Japan is operating yield control, keeping their 10-year benchmark yields at 0.25%, while yields across the world, I was looking at US, Canada, UK, are soaring. So I think if this theme continues to remain present, I won't be surprised if the dollar yen trades towards 130 and possibly higher over the next few weeks.
Lukman, thank you so much for your time. That is Lukman Otunuga from fxtm, and he does bring a very interesting question to the fore. Can the Japanese yen rather rise to that 20-year high, reaching possibly 130? But that's a question we'll try and answer next week as we analyze the results of the likes of Alphabet and, of course, Meta platforms, and those numbers are expected next week.